Let me ask you something direct. When was the last time you actually verified that your social security check is correct? Not assumed it was correct, not hoped it was correct. Actually sat down, opened the records, and confirmed with your own eyes that every dollar you earned over a lifetime of work is reflected in the payment hitting your account right now. If your answer is never, you are not alone, and you may be losing money every single month because of it. Here is what most people born before 1955 do not know. The Social Security Administration does not send you your benefit check and then wait for you to confirm the math. They send you a number. That number was calculated from an earnings record that has been sitting in a government database for decades. Some of those records go back to the 1960s, some go back further. And according to the SSA's own internal reporting, the agency issued over $2.5 billion in underpayments in 2022 alone. Not overpayments, underpayments. Money owed to retirees that was never paid. And here is the part that should bother you most. The people receiving those smaller checks were not notified. No letter arrived. No phone call came. The wrong amount just kept hitting their accounts month after month, while the correct amount sat uncollected inside a formula nobody asked them to verify. 3 specific problems keep showing up for people born before 1955. I am going to walk you through all 3 today. Here is exactly what this video covers. I am going to show you why your birth year puts you in the highest risk group for earnings record errors. I am going to walk you through 5 specific mistakes inside the SSA system that permanently reduce monthly benefits. I am going to give you a step-by-step correction process with exact form numbers and exact phone numbers. I am going to warn you about 2 situations where the financial damage is even worse than average. And I'm going to tell you about a retired electrician in rural Kentucky named Raymond, who collected a wrong check for 8 years until his neighbor, a retired county clerk, spotted something in a single afternoon that nobody at the SSA had ever flagged. Stay through the end. The final step is the one that actually moves money into your account. Most people skip it. Don't. My name is Marcus Graves. That includes the IRS, and it includes matters involving Social Security benefit calculations, earnings record disputes, and federal payment corrections. I want to be honest with you about something right from the start. I am not here to tell you the government is your enemy. The Social Security Administration employs thousands of people who are genuinely trying to do their jobs well, but the SSA processes over 70 million monthly payments. At that scale, individual accuracy is not the priority. Volume is the priority. Speed is the priority. And when speed is the priority, errors get made and errors get left alone. Your financial advisor is not trained to audit your earnings record. Your accountant is focused on last year's tax return. Your bank has no visibility into your SSA file whatsoever. And the SSA itself, I want you to hear this clearly, has no funded program dedicated to finding and correcting underpayments to current beneficiaries. They will find overpayments. They will send letters about overpayments. They will set up repayment plans for overpayments. But if the error runs in your direction, if the mistake means you have been receiving less than you are owed, that correction will not happen unless you initiate it. I have sat with people who worked 35 years, paid into this system every single paycheck, retired carefully, and still walked away with a monthly check that did not reflect what they had actually earned. Not because they did anything wrong, because nobody told them to look. That changes today. Let me show you what this looks like in real life. His name is Raymond. He is 73 years old. He spent 34 years as a licensed electrician working commercial construction projects across eastern Kentucky. His name has been changed for privacy, but every detail of his story is real and verified. Raymond was a careful man. He kept a budget written in a spiral notebook. He owned his home, a double-wide on 2 acres outside of Harlan County, that he had paid off in 2009. He had a small IRA his union had helped him set up in the late 1990s. When he retired at 65, he felt like he had done things the right way. His Social Security benefit was $1,724 a month. He signed the paperwork at his local SSA office without question. The woman behind the desk had been friendly. The number seemed reasonable for someone with his work history. He went home, told his wife what to expect, and adjusted their monthly budget accordingly. For 8 years, that number arrived like clockwork. Raymond never thought to question it. Why would he? He had worked union jobs his entire career. His employers had payroll departments. Taxes were withheld automatically. He assumed, the way most people assume, that if the money left his paycheck, it had been credited somewhere. Then, in the spring of 2 years ago, his neighbor Beverly came over for coffee. Beverly had spent 22 years as a county clerk before retiring, and she had developed a habit, almost a professional reflex, of checking documents carefully. Raymond mentioned his Social Security offhand during the conversation. Beverly asked if he had ever looked at his actual earnings history online. He had not. Beverly sat down with him at his kitchen table that afternoon. She pulled up ssa.gov on his tablet. She walked him through logging into his My Social Security account. She clicked over to his earnings history and started reading through it the same way she used to read deed records, slowly, line by line, looking for anything that did not fit. She found it inside 12 minutes. The years 1978, 1979, and 1980 showed zero earned income. Raymond had been working every one of those years. He had just finished his electrician apprenticeship in 1977, and those 3 years were some of his busiest. He had worked for 2 different electrical contractors and picked up additional work through a union referral program that placed him on short-term commercial projects across 3 counties, 3 employers, 3 years, multiple job sites. And somewhere in that complicated paper trail from the late 1970s, 3 full years of earnings had simply never made it into the electronic record. Beverly looked at Raymond across the kitchen table and said, "You need to find your paperwork from those years." Raymond went to his garage and came back with a cardboard box he had not opened since he moved into the house. Inside were folders. Inside the folders were tax returns going back to 1975. I am going to tell you exactly what happened next. But first, you need to understand why this kind of error is so common for people born before 1955, and why the SSA's own system almost guarantees that it goes undetected. Here is how your Social Security benefit gets calculated, and here is precisely where it breaks. The SSA builds your monthly retirement check on a formula called your AIME, Average Indexed Monthly Earnings. They identify your 35 highest earning years from your entire working life. They adjust each of those years for wage inflation using something called the National Average Wage Index. They add those adjusted amounts together and divide by 420 dollars, the number of months in 35 years. The result is your average monthly earnings expressed in today's dollars. That number feeds directly into your PIA, primary insurance amount. Your PIA is the foundation. Your actual monthly check is built on top of it. Here is the part that matters most. If even 1 year in that calculation is wrong, your PIA is wrong. And everything built on a wrong PIA is permanently wrong. Early filing reductions, delayed credits, spousal adjustments, all of it calculated on a number that was never accurate to begin with. Research published by Social Security Intelligence found that nearly half of all earnings record mismatches in the SSA system are never corrected because the people affected never knew to check. One analyst calculated that 5 missing years of earnings can reduce a monthly benefit by more than $150. Over a 20-year retirement, that is $36,000 that quietly disappeared without a single notice from the agency responsible for paying it. Now let me show you the 5 specific errors that create this problem, and why people born before 1955 are the most exposed group in the entire beneficiary population. Error 1. The pre-1978 Digitization Gap. Before 1978, Social Security records were maintained on paper. Employers submitted paper forms. Government workers made manual entries. When the SSA digitized those historical records, the process was imperfect in ways the agency has never fully disclosed. Years were missed. Numbers were transposed. Entire employer submissions were skipped. If you worked in your late teens, your 20s, or your early 30s before 1978, those years are in the highest risk category for missing data. A 72-year-old who worked warehouse jobs, construction sites, or retail positions between 1965 and 1977 may have several of those years showing 0 in the current electronic system. 0 credited years means a lower 35-year average. A lower average means a permanently smaller check. Error 2. Multiple employer years. Every year you worked for more than one employer is a year with elevated error risk. When you leave a job mid-year, your outgoing employer submits a W-2 to the IRS. The IRS reports that information to the SSA, but if there is a name mismatch, a social security number transposition, a late submission, or any clerical inconsistency, that employer's contribution to your earnings record may never get credited. People who changed jobs frequently through the 1970s and 1980s, worked seasonal positions, or picked up supplemental work through temporary agencies are especially exposed. Raymond's situation, 3 employers across 3 years in the late 1970s, is exactly the kind of complexity that causes gaps. Error. 3. Self-employment income not properly credited. If you ever operated a small business, worked freelance, drove for hire, or received income reported on a Schedule C, your Social Security credit for that income depended entirely on whether Schedule SEE, the self-employment tax form, was filed correctly for every applicable year. If Schedule SE was missing in any year, filed with an error, or not properly cross-referenced with your Social Security number, the SSA has 0 earnings on record for that period. A retiree who ran a small plumbing operation on the side through the 1990s, or who did independent contracting work between jobs, may have multiple years of legitimate earnings completely absent from the calculation. Error 4. Government pension offset miscalculation. This error hits a specific group hard: retired teachers, police officers, firefighters, and state or local government employees born before 1955. The government pension offset, GPO, reduces spousal or survivor Social Security benefits by 2/3 of the government pension amount. The rule itself is straightforward. The problem is when the SSA applies it to the wrong pension amount. If your government pension is $1,300 a month and the SSA has $1,700 on file, your spousal benefit gets reduced by $1,133 instead of $867. That is a $266 monthly error. Over 10 years, that is more than $31,000. Calculated from a number nobody verified after the initial filing. Error 5. Delayed retirement credits applied to the wrong start date. If you waited past your full retirement age to claim Social Security, the SSA was required to credit your benefit at 8% per year for every year you delayed up to age 70. This is called a delayed retirement credit under Section 202(w) of the Social Security Act. These credits are calculated to the exact month. If your benefit start date was entered 1 month late due to a processing delay, or if the SSA's system recorded your first payment month incorrectly, your delayed credits were calculated from the wrong point. That error does not self-correct. It stays permanent. On a $1,900 base benefit, 2 months of missing delayed credits equals a permanent reduction of approximately $25 per month. That is over $6,000 across a 20-year retirement. From a data entry mistake that happened on one afternoon in one SSA office. The documented proof. In 2022, SSA Office of Inspector General Report A-09-2-2-50713, a publicly available federal document, confirmed that the SSA had failed to correctly pay approximately 11,123 widows and widowers due to errors in survivor benefit offset calculations. Average underpayment per person, $9,894. These individuals had filed correctly. They had waited the appropriate time. The error was entirely inside the SSA's own processing system. The Inspector General estimated that roughly 40% of surviving spouses reviewed during that audit period were affected by similar calculation errors. 40%. That is not a rounding error. That is a systemic problem the government acknowledges in audit reports and does not go out of its way to fix on your behalf. Here is exactly what you do. These are specific steps. Real form numbers. Actual phone numbers you can call today. Step 1. Access your earnings history at ssa.gov. Go to ssa.gov and log into your My Social Security account. If you have never created one, it takes approximately 10 minutes with your Social Security number and a valid email address. Once you are logged in, navigate to your earnings history. This is a complete year-by-year record of every dollar ever reported to the SSA under your Social Security number. It goes back to your very first job. Read through every single year. You are looking for 3 things specifically. Any year showing $0 when you know you were employed. Any year where the income figure seems significantly lower than what you actually earned. Any gap in the timeline that does not match your work history. Write down every year that looks wrong. Note what the record shows and what you believe the accurate figure should be. That list is your starting point. Step 2. Gather your personal documentation. Pull out your old tax returns. Find W-2 forms. Look for pay stubs, union records, employer correspondence, pension statements, anything that shows actual earnings for the years in question. You do not need a complete paper trail going back to your first job. Start with whatever you have. Even 1 year of solid documentation, a single W-2, a single tax return page, is enough to open a formal correction with the SSA. Bring what you can find. The SSA will work with it. Step 3. Request your certified earnings record. Using Form SSA-7050. This is the official document that makes your case real. Form SSA-7050 is a formal request for a certified copy of your complete earnings history directly from the SSA. A certified copy costs $44, or it may be provided at no charge if you are requesting it specifically in connection with a benefit correction. Download Form SSA-7050 at ssa.gov. This document becomes the official comparison point, SSA's record on one side, your personal documentation on the other. Every discrepancy between those two documents is a correction you are entitled to request. Step 4. File your earnings. Correction using Form SSA-7008. Form SSA-7008 is the official request for correction of earnings record. Fill it out completely. Attach your supporting documentation, W-2s, tax returns, employer letters, whatever you have gathered. Submit the package one of 3 ways. Mail it directly to the SSA with certified mail and keep your tracking number. Call 1-800-7721-213 and ask them to open a formal earnings record review, or walk into your local Social Security office in person with your paperwork. In person, submissions are typically processed faster than mail. The SSA review process runs between 10 and 90 days. If the correction is confirmed, they will calculate any back pay owed and issue it as a lump sum direct deposit, covering up to 12 months of the underpayment under standard SSA retroactive payment policy. Step 5. Request written confirmation of your recalculated benefit. This is the step most people skip. It is also the most important step. After your earnings record is corrected, call the SSA and ask them to send you written confirmation that your primary insurance amount has been formally recalculated based on the corrected record and that your new monthly payment amount reflects that recalculation. Do not assume the correction automatically updated your check. Request written proof that it did. If the new monthly amount does not match what the corrected calculation should produce, you now have a documented paper trail. Use Form SSA-561-DAOS, Request for Reconsideration, under 20 CFR, Part 404, Sub-Part J to formally contest the calculation. The SSA must respond in writing with a full explanation. That paper trail is what separates people who fully recover their money from people who make a phone call, hear that everything looks fine, and go back to cashing a check that is still wrong. 2 situations carry significantly higher risk. If either applies to you, move faster than everyone else. Special Situation 1. You were born in 1953 or 1954. People born in these 2 specific years were grandfathered into a legal claiming strategy called the restricted application. This strategy allowed you to claim spousal benefits first while letting your own benefit grow at 8% annually until age 70 years, a legal move that could add tens of thousands of dollars to a retirement income over time. The Bipartisan Budget Act of 2015 eliminated this strategy, but only for people born after January 1, 1954. If you were born before that date, the option was available to you. If you never used it, you may have permanently walked away from significant money the SSA was never going to volunteer to tell you about. Write down these 2 words right now: restricted application. Bring them to your next SSA appointment and ask specifically whether this strategy was available to you and whether it was ever applied. Special Situation 2. You are currently receiving a survivor benefit. The 2022 Inspector General audit confirmed that approximately 40% of surviving spouses reviewed during that period had been underpaid due to errors in the widow's indexing computation, a specific internal formula governing how survivor benefits are calculated during a manual processing step. If you are receiving a survivor benefit right now and you have never had anyone independently verify that the calculation was applied correctly, this is your most urgent action item. Call the SSA this week. Ask them specifically to confirm in writing which indexing method was applied to your survivor benefit calculation and whether that method produced the correct result under current SSA guidelines. If they cannot confirm it clearly, file Form SSA-561 and request a formal written recalculation. Now let me tell you what happened to Raymond and Beverly at that kitchen table in Harlan County. Raymond found his tax returns from 1978, 1979, and 1980 inside that cardboard box in his garage. All 3 years were there, complete returns with W-2 attachments showing his earnings from each employer he had worked for during that period. The combined income across those 3 years came to just over $47,000 in actual wages paid and taxed. Beverly helped him fill out Form SSA-7008. They attached certified copies of all 3 years of tax returns and W-2 forms. They drove together to the local SSA office the following Tuesday morning and submitted everything in person. The SSA representative gave Raymond a confirmation number and told him to expect a response within 60 to 90 days. The letter arrived in 54 days. The SSA confirmed the earnings record error for all 3 years. Raymond's earnings history was corrected. His primary insurance amount was recalculated. His new monthly benefit was $1,891, an increase of $167 per month from the $1,724 he had been receiving for 8 years. He also received a retroactive lump sum payment covering 12 months of the corrected difference. That deposit was $2,004, sent directly to his bank account. Raymond called Beverly the morning the letter arrived. He read her the new monthly amount over the phone. She said she was not surprised. He said he was. Then he said something I think about every time I tell this story. He said, "I worked those years. I just didn't know I had to prove it." Now he has. And every month going forward, his check reflects it. Here is the single number I want you to carry with you after this video ends. 35. That is how many years the Social Security Administration uses to build your monthly benefit. If any of those 35 years are wrong, missing, underreported, or miscalculated, your check is wrong. This month, next month, every month for the rest of your life. No letter is coming from the SSA to tell you this. No phone call is scheduled. The agency has documented billions of dollars in underpayments across the past decade, and the people receiving those smaller checks were never contacted. The system processes 70 million payments a month. Your individual file accuracy is your responsibility, not theirs. But you now have everything you need to check it. Go to ssa.gov today. Log into your My Social Security account. Open your earnings history. Read every single year. If something looks wrong, a zero, a gap, a number that is lower than it should be, it probably is wrong. The form to fix it is SSA-7008. The phone number to call is 1-800-772-1213. And go to marcusgraves.com/checklist right now for a free 1-page guide that walks you through exactly which years to check first, what documentation to gather, and precisely what to say when you contact the SSA. It is free. It takes 20 minutes. It could permanently change what lands in your account every single month. Before you close this video, think of one person born before 1955 who is collecting Social Security right now. A parent, a brother or sister, a longtime friend, someone who worked for decades and has never once questioned the number on their check. Send them this video today. One share. 10 seconds of your time. If their earnings record has even one missing year, finding it and correcting it could put over $1,000 a year back into their life permanently. Money the SSA calculated wrong. Money that belongs to them. Money nobody was ever going to tell them about. That is what this channel exists to do. The check you are receiving right now should reflect every year you worked and every dollar you earned. Go make sure it does.